This is a promotional podcast for EIS Platforms Limited Trading as Growth Invest. Any comments made or opinions expressed in this podcast should not be construed as investment advice or a financial promotion. Startups and early stage businesses are high risk investments and you are unlikely to be protected if something goes wrong. Don't invest unless you are prepared to lose all your money. Hello and welcome to the Alternative Thinking Podcast with Steve Dobson and Melissa Griffiths. This is the podcast that takes a deeper dive into the alternative marketplace and exploring topical issues. Today's guests are Christiana Stewart-Lockhart and Luke Barnett from EISA. Welcome to you both.
Thank you for having us.
So, Christiana, can we get a bit of a background on yourself? You're the Director General of EISA. Can you tell us how you became involved in EISA, what EISA is, and why EISA exists?
Yeah, absolutely. Well, thank you very much. So EISA is EIS Association, so the Enterprise Investment Schemes trade body. So we do all the typical things that a trade body would do. So a big part of our work is education, events for the industry, updates around regulatory changes or technical changes and things like that, but also representing the industry to government. So we have about 400 members. They range from entrepreneurs and the people starting these businesses to the kind of intermediaries, so the lawyers and accountants working on these deals and supporting these startups. Obviously the fund managers as well, a really important part of the ecosystem, but also the financial advisors. So we really represent everyone involved in the enterprise investment scheme and the seed scheme. And for those who don't know, the EIS and SEIS are government schemes. This year is actually the 30-year anniversary of the EIS, so It's been going a long time. And they incentivize private investment into very early stage, high risk startups. And the way they do this is a number of tax incentives. And they've been supported by governments across the board since they were created, and actually account for a pretty impressive amount of investment into these startups. So the figures are now £32 billion into 56,000 startups. And I think something that many people don't necessarily appreciate is just how many businesses there are, whether that's kind of consumer brands we're using in our day-to-day lives or businesses making really huge scientific advancements that genuinely wouldn't exist today without the EIS or SEIS. So they're hugely important for the UK economy, for attracting talent here, making sure we're one of the best places to start a business. In terms of my involvement, so I've been Director General for 2.5 years now. And prior to that, I was working in Westminster for 15 years, Westminster and Brussels, so kind of within the political space. And it's great to be able to still do a little bit of that in terms of working with government and parliament and representing the industry. But also I have experience of startups in terms of my brother and a couple of my friends had started businesses who heavily relied on the EIS and SEIS. So I've seen from their side just how important it is when, you know, you're a very early stage business looking for investment, and it genuinely makes the difference between getting that investment and not.
Perfect. Okay. And obviously the sunset clause was something that you were involved in. We can touch on that in a bit. And so moving on to you, Luke, you recently were appointed as the new chair of the EISA Research and Education Committee, and alongside you are head of tax advantage investments at St James's Place. So a bit of background on yourself. You seem very well placed for the education side.
Yes, thank you very much. Yes, that's right. So I joined as chair of the committee a couple of months ago. And the reason I joined was, you know, in my background, I as you mentioned, head of tax and advantage investments at St James's Place, and St James's Place is, I think, if not one of the largest distributors of EIS products, and alongside VCT and BR. And I thought, you know, given our presence in the market, it would be useful. I hope that I can bring some of that knowledge of the advice distribution space, how these products are positioned in a firm as big as SAP, and that's why I joined the committee myself. My background, I've been in kind of financial markets and research in the space for about 15 years, and half of that has been in the tax advantage market. I've been at various different product providers, and now heavily involved in distribution across the largest providers. We service tens of thousands of clients in these products, and so it's quite important to SJP. And really my role in EISA is to try and help build up the community and kind of improve visibility and education. And I thought that was a useful value that I could bring to the committee.
Perfect. Well, I think they're very lucky to have you both. So, Steve, you were going to move on
I think
to...
Following on from something you mentioned there, Christiana, you talked about the association and the membership. Who exactly are those members? A little bit more detail, and how, I guess, do the different types of members, different clients use the association itself?
Yeah, absolutely. So it's really important from our perspective. As I mentioned, one of the key things we do is to represent the industry to government, and that's to, whether that's making sure that government is aware of any kind of challenges in the way things are in the economy right now or in the ecosystem, or whether that's working with HMRC to iron out any administrative challenges or difficulties people are having. But really, these schemes, the SEIS and EIS, are there to make sure that these startups and founders are able to get the investment they need. And it's really important that the schemes run well, both for the founders and the investors in terms of the administrative side. So that is a significant part of the work that we do to try and make sure they're running effectively as well. But the members, as I mentioned, are entrepreneurs. So these are very different stages. So they could be entrepreneurs who are just starting out, who've just done their first raise through SEIS, and they want to, one, be part of the association to meet some of the other members, but also to meet other entrepreneurs and founders as well. And then we also have, as I mentioned, lawyers and tax advisors and those who are supporting startups with that beginning stage of the journey, getting the capital that they need to grow, working on the deals. And obviously the fund managers are really key within that. And one of the things we do try and do is the number of times I get entrepreneurs coming up to me who, one, don't know about EIS and SEIS. First of all, that's a really key challenge, trying to raise awareness of that. And that's particularly the case amongst underrepresented founders or founders who maybe don't have a background in finance or don't have the existing networks and connections. So really trying to make sure the information is there and available to them. But also in terms of, everyone here is probably aware that there are different funds with different strategies, invest in different areas, different sectors, different stages. And it's quite hard to find information out about that. And I can kind of say, oh yes, this fund invests in this area and you should talk to these people, or this might be a good connection. But actually it's really important that we try and democratize that information. So we run a number of events across the country, our Ready, Steady, Grow events. We did 10 last year, we're doing 10 again this year. And these are free events for both entrepreneurs and investors who really just want to find out a bit more about the schemes and to meet others in the ecosystem. And that's where, you can find out about which funds invest in which areas and which stages as an entrepreneur, but also as a financial advisor or a potential investor as well. You can find out if you have a specific sector that you feel passionately about or a specific area you want to invest your money in. You can find out from those funds who invests in what stages, what amounts, the type of investee companies as well. Because I think, when we talk about this space and why so many people work in this area who do, they love it because it's so exciting to be working with these startups. And genuinely, if we look at some of the award winners at the EISA Awards, which took place a couple of weeks ago, the winner of Best EIS Investee Company is a company that is working on finding new ways to treat cancer and doing some really exciting work around, 3D printing of tumors using stem cells and trialing different drugs to make sure that treatment is as effective as possible. And these genuinely have the potential to save thousands of lives and have a massive impact on how we're living. So, yes, there are the very recognizable brands as well that everyone might pass on the high street or whatever that is, but also many of these companies are addressing some of the biggest challenges that we're facing. And so from that perspective, it's really fantastic and exciting to be working with founders doing such interesting things and to get to find out more about that and meet them as well at these events that we run across the country. So that's one part of what we do. And I mentioned also, in addition to those I've listed already, financial advisors are members of ours. And we do run a number of CPD qualifying webinars and in-person events as well, because I think it's so important that more people are aware of these schemes, because they're still quite niche. They're still relatively unknown. And I'm sure we're going to talk about that more, but that's something that in my role at EISA, I think it's really important that we try and raise the profile, particularly in this 30th year, and make sure more people know about the opportunity in this area.
Yeah, I think 100% agree with that. And Luke, we'll come to you in a second, but a valid point you made there about a lot of these small new companies just don't know about it. And obviously we're talking about it from the fact that it's out there. Obviously you're Director General of the EISA, or the EIS trade body, but where would they find out information on EIS or SEIS if it wasn't coming to you? Could they get that locally? How do they find out about it? Really starting at the bottom there.
Yeah, so we have free guides on our website that anyone can access, and there are guides from an investor perspective and from an entrepreneur perspective. They're actually really, I didn't write them, so I feel like I can say this, but they're really helpful and cover a lot of the bases. I do think it's interesting because we surveyed the attendees at our Ready, Steady, Grow events last year, and we had about 1,000 people attend across the 10 different events. And of those who responded to the survey, 25% had never heard of the Enterprise Investment Scheme before the event. Bear in mind, this is an EIS association event. So, you think that probably this is a disproportionately high level of recognition compared to the general population. And it really illustrates just how important it is to continue raising awareness. Yeah. But I think this is also where the intermediaries are so important, because when you speak to entrepreneurs, or when I ask them about this, I often say, how did you find out about EIS or SEIS? And a lot will talk about their accountants telling them about it. Some will say other entrepreneurs who they've spoken to, and some will say potential investors who they've had conversations with. But equally, there are, if the investor doesn't know and the entrepreneur doesn't know about it, then it's kind of it's really hard to know where they find out about it. And we do know from surveys and research that has been done that where people are using the EIS, they're more likely to invest more than they otherwise would. They're likely to invest at an earlier stage than they otherwise would as well. So it genuinely does have a big impact on behavior in this space, and make sure that there's more capital available for these early stage businesses. But yeah, it's a good question, and I think that there are key things involved about qualifying, like the age limit. And last year in April 2023, the government extended the age limit for the Seed Enterprise Investment Scheme from up to 2 years old to up to 3 years old. And I think that's already starting to make a big difference, because really, as a founder, your first 2 years are pretty full on. And maybe you're not even thinking about raising capital at that point yet. And so that's where the extension of this age limit, but also making sure that the lawyers and accountants who are working with these startups are telling them about the schemes and know about the schemes themselves and are comfortable using them, so that they are aware from the very beginning and aware of any kind of limits and requirements that the schemes involve as well.
And I guess, Luke, to you then, the other side of that is investors themselves. And I, speaking to people who have advisors, and when they talk to me about what do I do on my day to day, and obviously now at Growth Investor, a platform where we facilitate investment into tax efficient, a lot of people look at me blankly when I throw out an acronym. Finance loves acronyms, but you talk about EIS, VCT, SEIS. A lot of them have never heard of it, yet they have financial advisors. So where do you think the issue there potentially is?
No, I think that's exactly right. And I think that's, something that in the role that I've taken as chair is raising the kind of visibility and awareness of the scheme. If I put myself in an advisor's shoes, they've got a lot of tools in their kit. They've got a lot of issues, but they might only think of EIS at the end or not even know it. And that's, to your point, something that needs to be addressed. And hopefully we can work through in the industry to address that. From SJP's perspective, and we make it visible to advisors so they're aware of it. And we have quite a big framework around that to assist in that. It might be harder for smaller single IFAs, and that, if they have a small book of clients, it might only be a very small subset where EIS might be suitable to them. So I think it is, one, we need to raise visibility on it, but we also need to make it clear what EIS is.
Yeah.
What are you actually investing into if you get into EIS, and what are the benefits? But I also think it's important that we're clear on the risks as well.
Yes.
Yeah.
Because it would be detrimental to the association if the wrong people went into these types of schemes. So I think we need to make it more visible, and we need to make it clear as to what is inside EIS. And I think that's something that I'd like to, and we're working on the committee to try and improve and enhance the visibility and of the scheme, the advisors.
And that kind of leads me on to one thing that we're seeing more and more discussions about is knowledge-intensive EIS funds as well, which I think are beginning to make it a simpler way, possibly, for the advisor market to tackle the EIS. Do you see that at SJP as well? Is that becoming a...
Yeah, they are popular. They're becoming increasingly popular. I think our advisors like to your point, the administrative ease of it.
Yeah.
So yes, they are becoming popular, and it might create, think of VCTs, it looks like it's moving towards a cyclical environment of fundraising, which is fine. But in short, that structure is becoming popular. And I think it maybe helped with the planning scenario, because getting single EIS3s all the time can be administratively burdensome, and so a single document is helpful, and I think that's probably a good step forward, specifically around the rules as well. I think promoting investment into knowledge-intensive companies isn't the spirit of what the legislation should be doing, so I think that's also a positive step. So yes, I think they are becoming popular, and I think it's probably a good thing for the industry.
I mean, to me, I feel it's quite game-changing, and as they get a lot of knowledge-intensive funds now are beginning to shorten the deployment period so that it's going towards sort of 6 months, so that you can then get it into the right tax year. You get your EIS5 instead of all the EIS3s. And like you mentioned, Christiana, the fact that it's going into very innovative, companies that are really making changes is something I think that possibly the advisors find useful. Moving on, your sort of feeling, Christiana, on last season, running through the numbers?
Yeah, it's interesting. So HMRC release all the data in May every year, and it's always a big day because it's very interesting to see what the data says. And they do release a significant breakdown of certain things about the schemes, particularly on the geographical distribution and things like that. But there's no doubt that the last few years have been more challenging. The wider economic conditions have been more challenging. And what was interesting to see is that whilst the EIS and SEIS numbers were down on the previous year, and I should clarify that the latest HMRC data is for the tax year 2022-23, so it's always a year behind. But they were down on 21-22, but they were sort of a correction on the trend before that. So it's worth us remembering as well that 21-22 was also a record-breaking year. So that was the highest ever year for EIS investment. So it's down, but it's kind of continuing that upward trajectory if we acknowledge that the previous year was a kind of unusually good year. I think there are a few interesting things about the data. One is that, yes, the distribution is still largely focused on London and the Southeast, but we are seeing significant growth in the regions in terms of compared to the previous year. So there's, significantly more businesses in the Northwest that are using the SEIS, for example. That was an interesting stat that came out of that. And the other thing that I think is really interesting is if we look at the number of people investing through the EIS, for example, that was about 40,000 in the latest data, down from 44,000 the year before, but still up from 39,000 2 years before that. And I think what's really interesting about that data is if you break it down by the amount that they're investing, more than 50% of those individuals are investing £10,000 or less through the EIS. And this is where it's really interesting to think about, what is a typical EIS investor, or who is a typical EIS investor, because there is often a perception that to be investing in this area, you've got to be investing 6 figures every year. And, and actually the reality shows us that it's very different to that. And actually more than 50% are investing £10,000 or less. Now, I'm sure that varies significantly based on, funds, and certain funds have a minimum that is clearly higher than that. But I do think it raises a question when we are looking at kind of who might be appropriate for EIS investing, whilst acknowledging what Luke was saying about, these are high-risk liquid investments, and so it's important that the individual is appropriate. Potentially, it could be considered by a greater number of people than those who currently invest through the schemes.
There's a stat I saw, and correct me if I'm wrong on this, but you mentioned there 40,000, just over 40,000, 22, 23 tax year invested into EIS. We think it's a population of, is it 800,000 roughly that could invest into it? So we're talking about 5% of that population that could, did. You mentioned the point already about the education piece. What else is the blocker? Do we think it's if we look at funds, for instance, is it the minimum ticket size? Is it awareness, going back to that whole awareness point? Why do we think it's such a small number of that potential 800,000 that do invest?
Well, I think there's some interesting data that the UK BAA have done as well, which they surveyed their female angel members. And so these are women who do angel investing, and they found that 90% of them had not been told about EIS by their financial advisor. Yep. So, these are people who are investing through the EIS most likely, but that does raise a question as to whether, one, there are potentially more financial advisors who maybe perhaps there's opportunity to have better education out there to make sure they understand the tax reliefs involved and the opportunities in terms of the types of companies that are using EIS, but also to make sure that, they are able to tell their clients who might be appropriate and interested in investing in this space about the opportunities.
Just coming back to your point, I think it's interesting that the less than 10,000, if I think about the advised market and others, where it's maybe underappreciated, and I could be speaking completely out of turn here, but those small investments, could they be reflective of people investing in friends and family rounds, like into single companies? And I think there's probably a big divergence between the funds where there are big minimums, and if there are, high minimums, and if there are high minimums, they tend to attract larger investors. Yeah. So there's probably a large tail of people who are funding friends and families, which I think is a good use of the scheme. But there's no, I think, going back to data, it is difficult. It's not as deep as we'd like to analyze, and I think that's perhaps a limitation on being able to analyze it. But I think also, the perception of where we are in the economy, it is, people have, from our perspective at SJP, it's kind of right at the end of the planning situation. You've got to have very specific circumstances where you would want to invest into EIS. That doesn't mean, the friends and families' use of it shouldn't be encouraged for that perspective. But from the advised market, for us, when the economy is in dire straits, as it perhaps was, it does tend to mean that EIS, these kinds of things, there's less availability of capital to investors. This could be one of the elements.
Which is something actually we were touching on before we started, wasn't it, when we were chatting about the need really for EIS investments to become more popular. Potentially, we do need to start seeing some exits and some activity in the EIS funds in particular. Is that something that you find with your client base and the advisors?
I think so. I think that's fair. I think, one, it's the understanding of what you can tell someone. I think something we're very keen to educate investors on in our world is that whilst the minimum holding period is 3 years, it's very unlikely that you're going to get an exit after 3 years. So I think that needs to be made clear. And I think, holding a company for 10 or 13 years, it becomes a little bit difficult for the client to take. So I think, yes, if we see more exits, that would help. I think it would help the perception of the industry. And that would create the visibility and create more stories and good things to tell. And this is an example of another company. And don't get me wrong, there are lots of those already. But the more we can put out to market to demonstrate the benefits, not only to the companies but to the investors, that would certainly be a good story to tell to the market.
Yes.
Yeah. As you say, Luke, often this is more like 7 to 10 years in terms of the length of time that the investment is held for. And it's important that potential investors recognise that. But the figures, we're talking about, of course, they take into account crowdfunding as well, and other, friends and family, as you were saying, which are typically a lot smaller. But I think what's interesting is there has been significant support shown by the government and through their activity in the British Business Bank and British Business Investments to try and grow the number of investors and angel investors in this space. That's something that there is a lot of support for, and particularly women investing in this space. And so there are a lot of education initiatives. There are a lot of different things that are being created across the country. And the British Business Bank have a really interesting report that often comes out looking at the geography of the investee companies and how far away they are from their investors. And often what we find is people are more likely to invest in entrepreneurs and businesses that are close to where they themselves live and are based. And therefore, if we're looking at the regions, and I think there are an increasing number of funds looking to invest in the regions and actively investing in the regions and devolved nations. But if we're looking at that, it's also important that the investor community reflects that. And that's where, what I was saying before, if you're talking about £10,000, £20,000, that's a very different individual to someone who needs to have, £300,000 to invest. Yeah. And that's where I think sometimes the profile of an EIS investor is different to what the reality is in terms of what people assume an EIS investor looks like compared to the reality.
Yeah, I think it's a really valid point. But, I speak to a lot of funds on a day-to-day basis, and, it's really refreshing to see there's a lot more focus on the regions now. So it kind of goes hand in hand with, looking at the Levelling Up campaign. People talk about valuations being better away from London. Everything gets overinflated in London. So there's a lot of opportunity out there, but there's got to be investors out there as well to look at these things. And, I think it's interesting the point about the minimum ticket size. If you compare EIS to a VCT, we're looking from a fund perspective as opposed to a single company investment. The entry point can be like £3,000, £5,000 into a VCT, whereas to your point, Luke, it's around about 25,000 or so for most EIS funds. It could be a blocker to some, but again, it's all about who's the right person to be invested in that as a fund, and from an advisor perspective, to advise, going into a higher risk product, but it can diversify the risk profile of your portfolio as well by adding private equity. So it's an interesting topic out there, and there's no right wrong answer, but it does feel like there should be more people investing into these products and talking about these products.
Yeah, absolutely. And there's a think tank called the Entrepreneurs Network, and they actually published something quite interesting looking at different founders and talking to different founders a couple of years ago. And one of the founders they interviewed was saying that, she had worked in the city for several years before she founded her own business, and she found out about SEIS and EIS when she was looking for investors into her business. But she also said that she'd had significant bonuses for the time she was working in the city, and she would have loved to have invested in some early stage businesses through the SEIS and the EIS, but she just didn't know the schemes existed. So I think there's also a wider question of, there's a significant number of people who are earning very high salaries, but who maybe don't have financial advisors. Yeah. And particularly those who are perhaps slightly younger or earlier on in their careers. And that's something as well that we should be looking at, I think. And those types of people who are getting significant bonuses maybe do want to support early stage entrepreneurs and invest in this area, in an area that they're excited about, but just don't know about the schemes at the moment. So that's, again, where we're really hoping to raise the profile. And the other thing I think it's also worth talking about is, I think some of the tax reliefs associated with EIS are often forgotten. And particularly when you're investing through a fund, you can often have quite an unusual situation where the fund, the value may be up overall, but maybe one of the companies has failed. So, as an investor, you've got loss relief on the one that's failed, even though your investment is up overall. So that's something I think loss relief is really important to remember. Hopefully it won't be needed. Hopefully the investment will do very well. But it does make a significant difference to know that you have that available if the company does fail.
And I just to your point around, I guess, the portfolio elements of investing in EISA, and that's something I'm keen to raise the profile as well in this role as chair, is that it's not just a tax planning tool. In fact, I'm really keen, even at SJP and the committee, it shouldn't be seen as a tax planning tool, specifically since the patient capital review. Yes, that there's a great benefits to it, but can also be seen and should be seen as an element of private market allocation into your portfolio. And I think that's quite important. And back to Christiana's points about people who earn big bonuses. It's such a unique situation where you get access to high quality startups, to retail investors, and get the tax breaks. I mean, it's really unique. And if you have the ability, people should take part in it. But and those are the kinds of things that we've said it before, but people need to be made aware of, and it's specifically to high earners. It's one, got the portfolio benefit, but two, you get those tax reliefs and access to good quality startups in the UK, which is really exciting.
And in very exciting sectors as well, which I think is something that and also, I mean, we talked about tax relief, but there is also the inheritance tax relief after 2 years, and I think that is very much missed in EIS, particularly with the huge issue coming of intergenerational wealth transfer. EIS gives a great opportunity for that for anybody looking down the line as well.
And there's also, so the European Commission about 6 years ago did a big study on schemes of this kind across the world. And they actually found that the number one most effective scheme of this kind in the entire world was the SEIS, and the number two most effective was the EIS. So we are really lucky in the UK to have the two leading schemes in the world in terms of investing in this area. And they are really effective not only at making sure that these innovative entrepreneurs have access to the capital that they need, but also in attracting tremendous talent to the UK. Genuinely in the UK, we are one of the best places in the world to start a business. I've spoken to many entrepreneurs who, and not only entrepreneurs, but also people coming here to work at these startups, who have started their business in the UK instead of Germany or Italy or wherever else it might be in Europe, in part because of these tax reliefs, but also because of the ecosystem that's been built here. And I think it really is one of the jewels in our crown, and we've got to really celebrate the fact that the UK is really, really fantastic when it comes to startups. And so we have very, very great quality startups doing really exciting and interesting things, and it's important that we celebrate that talent and that success, and hold it as something that we're really good at here in the UK, and we want to continue to be good at it. And I think attracting talent from abroad and entrepreneurs from elsewhere in the world to the UK is something that's really, really positive, and we should make sure we keep doing that.
Yeah. Well, and on celebrations, that leads us on to what is EISA going to do for the 30th year celebrations?
Yeah, absolutely. Well, we're really excited. We've got an event on the 18th of September, and really a big part of what we're trying to do is a lot of what we've been talking about here. So really raising the profile and celebrating all the success stories. And, there genuinely are so many businesses that you and I might use in our day-to-day lives. And I appreciate that as the DG of EISA, I'm meant to kind of be an ambassador for these schemes, but I'm always very excited because I'll have conversations with people and someone will bring something up and I'll say, oh, that's EIS and that's EIS.
Go on,
and
throw
that's
some
EIS.
brands out there that people will know.
Sorry?
Throw some brands out there.
Oh, Trini Woodall often talks about the importance of the SEIS for her business, Trini London, which is one of the fastest growing consumer brands in Europe. Mm-hmm. So that's one, but there's also many different things like, we've recently announced our new chair, Joanna Jensen. She founded something called Child's Farm, which for anyone with children, you might be familiar with the children's skincare brand. But then
Gusto.
Gusto, yes.
What was the one that...
There's Deliveroo as well, Just Eat, many
So it just shows the merits of it. And
Moneybox, Revolut.
Well, a lot did very well, didn't they, in the pandemic, a lot of the delivery.
Yeah, absolutely. And this is, the importance of creative destruction and disruption as well. And that actually, as something, again, we were talking about before, but periods of economic challenge can also be tremendous opportunities for startups and for innovation as well.
Yeah. Well, I think with that, we're all looking forward to coming to the 30th celebrations. So thank you very much, both of you, for coming today onto Alternative Thinking Podcast. And we look forward to chatting again soon. Thank you.
For having
Thank you
us.
both. Thanks for having us.
To hear more from Steve and I, tune in to either YouTube on video, or we're also available on all good podcast channels.